So here is another bad trade of the track record. And by the way, guys, when you have a strategy that has a statistical edge and you are actually executing it correctly, there is no bad trade. But I believe you would understand that by now. That's why it's so important that you run through your trades after you've done them. The debrief phase, whether you do it on a weekend or things like that, it's extremely important. You need to know, did you follow your plan? Did you not follow your plan? Is there something you could have done differently? Where you just completely correct with everything and it didn't work out? Because when you have a statistical edge that works on paper, that's great. But to build the confidence into being able to execute it, you need to A, do it, and B, have that debrief so that you can align or understand, bring awareness to your execution process. And yeah, just make sure that the more often you do it, the more confident, the more stronger you become. It's like a muscle at the end of the day. So let's have a look at this trade. We have here again, this is the Dollar-CAD. We call it Looney. This is, by the way, a bird on a coin in Canada. Weekly structure. So again, look at this part here, the right part. We see that on the weekly, the price was going up. We have a clear structure, right? Retracement, higher high, and going up, and then again a retracement here. And our plan was to rebuy into that move because, we were targeting then this area here. So this is the 136 around the round number and the 136.50. So weekly, everything intact because, again, we saw that the support here around the 136 was holding. There was a quite high probability that we could even target these highs here again like it happened before. Okay, so that's for the plan. That's the structure. That's following the exact strategy. Now we look on a daily. On a daily, obviously, it looks a little bit more messy. Why messy? Because we have a pullback structure here. So it's not just one pullback that we're now trying to trade back up, but we can see that after it reached this high on the daily, it had a pullback, right? It held this level here at 136.50, went back up, and then again back down. This level held. Okay, we had a wick. I showed you in the strategy video that I'm not looking at wicks, but at closed candles only. But here you see, right, this is a lower high, and this is a lower low, but it held the 136 this time. Only if the price had went down below that level over here, it would have been invalidated. So all in all, on the daily, we do have like a pullback structure within, on the weekly, a bullish structure. So it's a bit of a counter trend within an ongoing trend type of setup. All right, so that's what doesn't make the setup a 10 out of 10. Okay, you understand? Because the alignment between the two time frames is not 100%. Nonetheless, it is completely within the trading plan and the strategy rules. Okay. Now looking at the 4 hour, we can see that after the price came back down, it's building bullish momentum again. And we wanted to, right, the idea of the strategy is a trend continuation. And you see here, so we formed that low, so we went higher, higher low, higher high, and that here, even though it was lower than this one, it still held around the 136, the round number. So that one, and then it actually recovered quite well. Back to the 136.50, which is the next round number that we were looking to enter on, and in order to catch a move back up here. So on the 4 hour, the support of the round numbers, everything was there as well. Like I said, these things here with the structures, they don't, or they're basically never completely perfect. Even on the last trade that I showed you, they were pretty much perfect and the trade still didn't work out. This is why you need to train your trade, execute it, do the back testing, do the journaling, and then also the debriefing so that you just get much better of an understanding of how these setups typically behave, and you just get a better feel for it, and it becomes more second nature of what you're looking for. That's, by the way, something that you cannot program into an EA. An EA just can work with a level, boom, that's it, more or less, right? So, now on the 1 hour chart, we saw the price went above the 136.50, and we saw then here that 1 hour candle, it's a little bit difficult to see, but that we had a wick here that was supported by the 136.50, and that's why we entered this trade here. So that was our trigger, the additional confirmation, the price holding above the zone. It's also trading above the EMA and SMA levels on the 1 hour. So even on the smaller time frames, trading above the EMAs, everything looks correctly in place. Now, and this is the irony of trading. It just happens at times. Now the price actually went up pretty nicely. And what we did after the price went up, because again, in the 4-hour chart, you can see that on the 4-hour, we still have like this corrective formation, right? Like it's not like on a weekly going straight up, but it's actually a downtrend within an uptrend, if you want. And in order to secure ourselves from the price going back down and potentially forming a new low here, I put the price on break even once we've reached the 137, okay? So we've entered the trade around 136.50, we went to 137, and then we put the price at the break-even level here. And so again, why? Because the structure is rather showing there is a potential for weakness here, and you want to take calculated risks, right? Even now, even within that not 10 out of 10 setup, the price went in your favor. So you want to secure some bag here, right? Instead of just like letting it flip-flop on you and then ending up in losses. Very important. Trade management, risk management. One of the most important things that you also need to do, because a lot of people would maybe hesitate, struggle, wait, and before they know it, the price is back here. So no, we took break even, that's it, end of story. And what happened then, the irony of trading is what I'm saying, so the price came back down, it basically hit our stop loss on break even. Don't forget, there's always a spread involved, so even when it looks like it didn't hit the exact level, it did. So it kicked us out to just make a U-turn and then actually hit the target. What do? You know, so I'm sure everyone who's been in trading for a while has seen these things happen. But that's why you cannot, you need to work on your framework. Your framework of trading success cannot be whether the trade was a profit or not. Keep the bigger picture in your mind. Your success is determined by whether you have a strategy with a statistical edge and you followed the strategy's rules and you did all the analysis correctly, all the steps correctly, and then also the debrief post-analysis as well, okay? And yeah, so that trade went into break-even. So it wasn't even a loser, it was a break-even trade, but of course this is frustrating. So you also need to learn to manage your emotions in these situations. So yeah, this trade was not a 10 out of 10 setup. And you have to learn to take not 10 out of 10 setups. And that's why you manage their risk more tight. Because if it's not a 10 out of 10, you need to expect that things will more than likely go maybe in a different direction. You know? And in this case, okay, the 4-hour structure was counter trend within a bigger weekly structure that was going up. Fine. That was for us the reason that we need to manage our trade more closely. Because again, from our backtesting, the statistical data work, and then also from our journaling, we know that when the setups are less strong, we need to manage our risk more. Very simple. And that's why I'm not really, you know, there's nothing wrong that happened here. Even if the trade hit break even and it didn't work out per se as a profit, it was still a success in the sense that we followed the rules, we managed our risk, and everything's fine. And that's actually also the learning. We followed the trading plan correctly. Break even is not a bad result, and we focus on what we can control. You don't focus on anything you cannot control. You can say like, but the price, that 1 pip, and blah, 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 blah. No, don't even start to think this way. Never waste energy, any thought, anything on something you have no control over. Don't do it. Because if you do that, you're lost. You will obsess about and fuss about so many things that you can do absolutely nothing about. That's nonsense. Put your power where you have something you can control only. That's the only way to stay sane, stay focused, and stay sharp and also effective and have the result. By the way, that's why journaling is so important. And this strategy developed on that kind of journal. Because, you know, people also, what kind of journal software do you use? And this and that and that. Don't be fancy. You don't need to be fancy. What you need to do is work. And even that work is simple. You just got to do it. So here, when this whole thing started, cut out on paper and put it on basically a physical book. Why? Because I realized when I write things down, they just end up more imprinted in my mind and brain than if I just put them on the screen. Do you know about yourself what works better for you? You know, that's what I mean by putting in the work. Find things out. Put in the extra mile. It's never crowded. And then, you know, it's that simple. It really doesn't need more than that to have a proper journal so that you can review your trades. And don't forget, when you do all these things, and even if I'm showing you now losing trades or break-even trades, this is the bigger picture. This is 25 months of consistent profitability, 2,789 trades, 20,198 pips, okay? There's nothing to argue about these numbers. This process, and you can see the strategies, no voodoo, no magic indicator, no order block that nobody in the world knows how to define properly, just statistical proper work put into action, properly reviewed, keep your mind sharp, have your execution under control, and just keep on churning along. Boom, that's how it works. So let me show you another trade as well.